Do you know what the difference between a pre-qualification and a pre-approval is? The difference can make a major impact on your loan decision and how smooth your loan process goes. So in today's video, we're going to discuss the difference between a pre-qualification and a pre-approval. Stay tuned. Well, hey, what's up? It's Channing, owner of Bayou Mortgage. In another video today, we're going to talk about the difference between a pre-qualification and a pre-approval. And understanding the differences and who uses them and who typically doesn't will help you have a better, smoother loan process, which you should definitely want when you're buying your first house. Okay, so let's talk about the pre-qualification. What a pre-qualification is it's basically just a piece of paper that has some stated information on it provided by you, the borrower. So you go online, you click a button, you do an online application with a lender that promises to be really fast, you enter your information, you click submit, it says, "Congratulations, John, you are pre-qualified to spend $450,000 on your new house." And you're very excited because you didn't have to talk to anybody, right? You just, boom, and it's done. You got the pre-qualification letter, right? So a pre-qualification letter is simply information that comes from the borrower, you. It's not verified. It doesn't have the backing of an expert, right? It doesn't have any of those things. They literally pull your credit and they look at your information and that's it. You could see how that's potentially dangerous now that I bring it up. So what a pre-approval is it's similar. So you do an application online, you have your credit pulled, but then the lender asks you for supporting documentation to back up the things that you put on your application. The reason why this is so important is not because we think you're a liar, although people do lie. It's because you don't do this every day. So you say your income's one thing, but you don't understand how the underwriter makes a loan officer calculate income. You don't, there's a rule, we've talked about it before, called the ability to repay. As a regular person who doesn't do mortgages every day, you don't know those guidelines and you're not expected to. That's why you want an expert in your corner, because they need to know these things. So when you don't understand them, you could see how things could spiral out of control really fast, because you basically say, I make $4,000 a month because right now you're making $3,000 a month in overtime and $2,000 a month in base pay. That's $5,000. My math is bad, but you guys get the point. But what you don't know is that overtime has to be averaged over 2 years. Or you're self-employed, so you list what you grossed last year and not what you netted after what you put on your tax returns. Maybe it's a loss. All of those things are important. That pre-qualification letter might get you in the door to look at houses. It might allow you to go look at that house that just popped up that you absolutely want to go see, and you don't have time, you think, to talk to a lender. What it cannot do is get you a loan. At some point in the process, you're going to have to go through the underwriting process. So if you're working with a lender that cares about how your process goes, they're going to ask for these things up front. And typically, online lenders aren't doing that. A good, reputable lender, a broker, a good loan officer is going to ask you for these documents up front because they don't want your loan to blow up in the middle of the process. It's embarrassing. It's frustrating for you to go under contract only to have to back out or leave the contract because you couldn't get your loan approved. You get frustrated, you get down, you feel like the process is stressful and even more overwhelming than you already felt it was. And it all can be avoided by avoiding online systems or pre-qualifications from lenders and states away that don't have an interest or care in your actual transaction. Get pre-approved. Do the work up front, right? That's how life works. If you do the work up front, the benefits on the back end are usually a lot better. So the pre-approval is doing the work up front. It's basically the trial run between buying that, finding a house and buying the house. It lets you, it's kind of like a mini underwriting process because loan officers, good ones, have gone through this process. They know what to look for, but that's why it's so important. That's why it's important you have to be accurate and honest on your loan application. That's why you have to back it up with the supporting documents like your pay stubs, like your W-2s, like your bank statements, and if you're self-employed, like your tax returns. All of those things will help the lender to catch potential issues before you go under contract, before you're under all that pressure, and before you'd have to face any embarrassment if they can't do the loan. So that's the difference between a pre-qualification and pre-approval. I hope that helps you. If you need one, we'd love to help you. Just drop a comment, or our website's going to be in the description. You can go there. As always, please like the video, drop a comment, and subscribe to the channel. Helps us reach more people just like you. I'm Channing. I look forward to talking to you soon.